How to build credit from scratch, step-by-step guide. Did you know that millions of people get turned down for apartments, car loans, or even jobs, not because they have bad credit, but because they have no credit at all? It's crazy, right? You can be completely responsible with money, paying rent on time, covering bills, saving every month, and still have a big fat zero when it comes to your credit score. And here's the kicker. Without a credit history, you'll end up paying more for the same things in life. More interest on a car loan, higher security deposits, sometimes even rejected for housing because landlords see no credit as no trust. So, if you've ever wondered, how do I even start building credit when nobody will approve me for anything? You're in the right place. Because today, I'm going to show you exactly how to build credit from scratch, even if you've never had a credit card or loan before. By the end of this video, you'll know the step-by-step process to go from zero to a strong, trustworthy credit profile. One that opens doors to real financial freedom. All right, let's dive in. What is credit and why it's your financial reputation? Before we get into the steps, let's break this down simply. Credit is your financial reputation. It's the story of how you handle borrowed money. Every time you take out a loan, use a credit card, or pay a bill on time, that story gets updated. Lenders, landlords, and even employers can read that story through your credit score, a number that usually ranges from 300 to 850. Think of it like a report card for your financial behavior. 800 plus sounds excellent. You're a rock star with money. 740, 799, very good. 670, 739, good. 660 fair. Below 580, needs improvement. But if you're just starting out, you might not even have a score yet. And that's what we're fixing today. Your credit score is made up of 5 key parts. Payment history, 35%. Do you pay on time? Credit utilization, 30%. How much of your available credit are you using? Length of credit history, 15%. How long have you had credit accounts open? Credit mix, 10%. Do you have different types of credit, like cards and loans? New credit inquiries, 10%. How often are you applying for new credit? These 5 things determine how lenders judge your trustworthiness. And the good news? You can control every one of them. So let's go step by step through how to build your credit from zero, even if you have no experience and no co-signer. Step 1. Open your first line of credit the smart way. When you're starting from nothing, the biggest problem is that nobody wants to lend you money because you have no credit history. But you need credit history to prove you can handle money. It's a catch-22. That's where the secured credit card comes in. Here's how it works. You make a small deposit, usually between $200 and $500, and that deposit becomes your credit limit. You're basically borrowing against your own money. It's low risk for the bank, but it counts toward your credit history just like any other credit card. For example, if you get a secured card with a $300 limit, start using it for small, consistent expenses, like gas, groceries, or your Netflix subscription. Then pay it off in full every month. This does 2 things. It builds your payment history, the most important factor in your score. It keeps your utilization ratio low, which boosts your score faster. Let's say your limit is $300. Try not to spend more than $30, $60 a month. That's 10 to 20% of your limit. That's the sweet spot lenders love to see. Do this for 6 to 12 months, and you'll have your first positive credit history on record. Quick pro tip. Don't apply for multiple cards at once. One is enough to start. The goal right now is building trust, not chasing limits. And if you're finding this helpful so far, go ahead and hit that like button. It tells YouTube that this video is helping people take control of their financial future, and it helps more beginners find this exact roadmap. Step 2. Become an authorized user on someone else's account. This is one of the most overlooked, yet most powerful ways to boost your credit from day one. If you have a family member or close friend with good credit, someone who pays their bills on time and keeps their balances low, ask if they can add you as an authorized user on one of their credit cards. You don't need to use their card or even touch it. Simply being listed means their good payment history will appear on your credit report too. Let me give you an example. Let's say your older sister has had a credit card for 5 years with a perfect payment record and low balance. When she adds you as an authorized user, those 5 years of history instantly show up on your report. That's a massive head start. But there's a catch. If they miss payments or rack up debt, that can hurt your score too. So only do this with someone financially responsible. This strategy can sometimes raise your score by 20, 40, even 60 points in a few months, without you borrowing a cent. Step 3. Set up autopay and master your payment habits. Now, once you've got a line of credit, even just one, the most important thing you can do is never miss a payment. One late payment can knock your score down by over 100 points, and it can stay on your report for 7 years. That's a long shadow to live under for something that could have been avoided. So here's what you do. Set up automatic payments for at least the minimum amount due. Ideally, pay your balance in full each month to avoid interest. Track your due dates. Set reminders if you have to. Payment history is 35% of your credit score. It's literally the single most important factor. Here's an analogy. Think of your credit score like your GPA. You can have great grades all semester, but one F can pull everything down. In credit, that F is a missed payment. Consistency is your superpower. Even small payments made on time, every time, show lenders that you're reliable. And if you're on the road to financial freedom, make sure to subscribe to Finance Compass. We drop new videos every week designed to help you master your money without needing a finance degree. Step 4. Keep your credit utilization super low. Your credit utilization, how much of your available credit you use, makes up about 30% of your credit score. So even if you always pay on time, maxing out your card every month can hurt your score. Here's how to think about it. If your credit limit is $1,000, don't spend more than $300. But if you really want to optimize your score, aim for 10% or less. That's $100 on a $1,000 limit. Here's a little story. One of my subscribers messaged me and said, "I always pay my card in full every month, but my score isn't going up." Turns out, they were spending almost their full limit, then paying it off after the statement closed. That meant, when the credit bureaus saw their report, it looked like their card was maxed out, even though they paid it later. The fix? Pay your balance before the statement date, not just the due date. That way, your reported utilization stays low and your score climbs faster. Think of it as looking good for the financial selfie that lenders see each month. Step 5. Add a credit builder loan, the secret weapon. Once you've built a little credit history, usually after 6 to 12 months, it's time to add some variety. Lenders like to see that you can handle different types of credit. Not just credit cards, but loans too. That's where a credit builder loan comes in. Credit unions, local banks, and even online platforms like Self or Credit Strong offer these. Here's how they work. You take out a small loan, maybe $300 to $1,000. The bank puts that money in a locked savings account. You make monthly payments, say $25, $50 for 12 months. Once you finish, you get your money back, plus your improved credit score. Every on-time payment gets reported to the 3 major bureaus, Experian, Equifax, and TransUnion, boosting your score with each month. It's like a gym membership for your credit score. Small, consistent reps that build long-term strength. Step 6. Monitor your credit regularly. Now that your credit is growing, it's time to protect it. You can get a free credit report once a year from each bureau at annualcreditreport.com. But I recommend checking your score monthly using apps like Credit Karma or Experian's free tools. Why? Because errors happen all the time. Maybe someone else's account shows up on your report. Maybe a payment you made isn't being reported correctly. If you spot a mistake, dispute it immediately. The sooner you fix it, the less damage it does. Also, tracking your score helps you stay motivated. Watching it rise from 0 to 700 plus over time is incredibly rewarding. It's proof that your discipline is paying off. Step 7. Keep your old accounts open. This one surprises a lot of people. You might think closing an old credit card you don't use is a good thing, but in credit scoring, age matters. The longer your accounts stay open, the better your length of credit history looks. That's 15% of your score right there. So, even if you stop using your secured card after upgrading to a regular one, keep it open if it doesn't charge annual fees. Let it quietly sit there, adding age to your credit profile like fine wine. Your credit score loves longevity. Step 8. Be selective about applying for new credit. Every time you apply for a new credit card or loan, the lender does a hard inquiry on your report. Each one can drop your score by 3 to 5 points temporarily. That's not a big deal once or twice, but if you apply for multiple cards in a short time, it can signal risk to lenders. So, be strategic. Space out your applications by at least 6 months, and only apply for cards or loans that make sense for your goals. Remember, you're playing a long game here. It's not about how many accounts you have, but how well you manage the ones you do. Step 9. Leverage your good credit for bigger opportunities. Once you've built a solid score, say in the 700s, congratulations, you've earned a powerful financial tool. With good credit, you can qualify for lower interest rates on loans and mortgages, get cashback or travel rewards credit cards, negotiate better insurance rates, or even get approved faster for rentals. But here's where the real magic happens. You can use your good credit to build wealth. For example, you could use 0% APR offers on credit cards to fund short-term investments or side hustles, as long as you're disciplined and pay it back before interest kicks in. Or you could refinance high-interest loans into lower ones, saving thousands over time. Good credit doesn't just make life cheaper, it makes opportunity accessible. Step 10. Mindset. Building credit is about building trust. Now, let's talk about the most overlooked part of credit. Mindset. Your credit score isn't just a number. It's a reflection of your habits, your patience, and your ability to manage responsibility. People often say, credit cards are bad, but that's not true. Credit cards aren't dangerous. Impulsive spending is. Used wisely, credit cards are some of the most powerful tools for financial growth. You can earn rewards, build history, and access opportunities, all while spending on things you already buy anyway. The key is self-control and consistency. Here's a mindset shift. Instead of thinking, I'm borrowing money, think, I'm building trust with future lenders. That mindset turns every small payment into an investment in your reputation. Common credit mistakes beginners should avoid. Before we wrap up, let's talk about what not to do. Because avoiding mistakes is just as powerful as doing the right things. Don't close old accounts unnecessarily. It shortens your credit history and can hurt your score. Don't max out your cards. High utilization signals financial stress, even if you pay on time. Don't apply for every store card or loan offer you see. Too many inquiries can make you look risky. Don't pay late, ever. Set up auto-pay or reminders. One missed payment can take years to recover from. Don't ignore your credit report. Errors happen, and they can quietly drag your score down. The best way to win the credit game is to play it slow, steady, and smart. Recap: the credit building blueprint. Let's quickly go over the key steps again. Start with a secured credit card. Keep utilization under 10%. Pay on time. Become an authorized user on someone's established account. Set up autopay to build flawless payment history. Use a credit builder loan to diversify your credit mix. Monitor your credit regularly for errors and progress. Keep your old accounts open to boost age. Be selective with new credit applications. Once your score grows, leverage it for financial opportunities. Maintain a responsible mindset. Credit is a tool, not a trap. Do these consistently, and in 12-18 months, you could see your score climb from 0 to the mid-700s. That's the level where banks trust you, interest rates drop, and opportunities open up. Conclusion: building credit is building freedom. Credit isn't just about numbers, it's about freedom. Freedom to rent where you want. Freedom to buy the car you need. Freedom to borrow at fair rates and invest in your future. And the best part? You can start right now. You don't need a huge paycheck, fancy financial knowledge, or rich parents. You just need consistency, patience, and the right habits. Start small. Stay disciplined. Watch your financial reputation grow. And with it, your opportunities. If you found this video helpful, hit that like button. Share it with a friend who's just starting their financial journey. And make sure you subscribe to Finance Compass for more clear, practical, and empowering personal finance videos. Now I want to hear from you. What's your biggest challenge when it comes to building credit? Drop a comment below. I read every one and might feature your story in a future episode. This is Finance Compass, guiding you towards smarter money decisions and helping you build the life you deserve, one step at a time.